Let's have a session on OCR Paper 1 for GCSE Business. So I want to look in this video at 8 big topics, and that's based on the advanced information that's been provided by your exam board. Now, if you're not aware of the advanced information, the link is there below in the description box. Please make sure you've revised diligently with respect to your advanced information. So let's go through 8 big topics. Topic number 1 is business ownership structures. Now, one of those business ownership structures is partnerships versus private limited companies. Let's go through the key features of each. So partnerships key features: 2 or more people own and run the business. It's unincorporated, so it has unlimited liability, All the partners agree to the deed of partnership, which legally sets out how the profits and control will be distributed. Now, private limited company, the key features: owned by its shareholders and managed by a director, and shareholders are not allowed to sell shares to the public via the stock exchange. And you must remember that shareholders' losses are limited to how much they invested in the business. So of course, private limited company has limited liability. Now, I advise you to revise all of the business ownership variations. So we could be thinking sole traders versus partnerships, partnerships versus private limited companies here, and of course private limited companies and public limited companies. With respect to partnerships versus private limited companies, the benefits of each. So partnerships, different partners have different skill sets, share workload, share risk, and financial records will not be published publicly when you're a partnership because it's an unincorporated business. Now, with private limited companies, of course, you get limited liabilities. So if something in the case study mentions about personal assets, then limited liability is going to be a good thing for the entrepreneur. And of course, extra finance through sale of shares, and that might help finance business expansion or some form of investment. So you might want to check the objectives of the business make sense for the business ownership structure. And that's why I think number 2, aims and objectives, is an important topic. Now remember, an aim is the main goal of the business, while objectives support this aim and help the business achieve it. Some examples: survival, profit, domestic growth, international growth, increase in market share, and social objectives. But also remember, with aims and objectives, particularly for longer questions and very suitable for conclusions, is that aims and objectives will change over time because businesses operate within a dynamic environment. Stuff is always happening in the world, in the external environment. There's technological change, there's economic change, there's legal change, there's environmental change. All of these things are happening, so you must be aware that businesses' aims and objectives will change over time. And moreover, they're going to differ depending on the size of the business. They're going to differ depending on the volume of competition. Do you have lots of competition or limited competition? And they're going to differ depending on the type of business. The third big topic is segmentation. Segmentation is when potential customers are divided into different groups. It could be location, income level, gender, or age. So why use segmentation? By segmenting the market and providing different product variations, a business will be better able to meet customer needs, and this might lead to higher levels of brand loyalty, and that will allow a business to increase prices and increase its revenues. The next topic, pricing strategies. Now, 2 of those pricing strategies, price skimming and price penetration. Let's go through the key features and when it's appropriate to use each. So price skimming is when the business initially charges a high price when the product is first released, and then after time the price comes down, it's reduced. And that's going to make sense if you've got an existing brand loyalty and you're seeking to increase profits. Now, the equal and opposite is price penetration. Price penetration is when the business initially charges a low price when the product is first released, and then after time the price is increased. And that makes sense if you're looking to grow awareness and market share. Number 5, motivation and its importance. Remember these points if you need to be making those logical strands. So why is it important to motivate your workforce? Improve productivity, lower absenteeism, improve staff retention, reduce recruitment costs because no one's leaving, you don't need to replace them. And as people are staying with you longer because you've retained them, it might lead to them growing with the business, becoming more experienced, and that could lead to improved quality. Number 6, motivation methods. How do you get them motivated? Well, financial methods or non-financial methods. Financial methods increase salary or wages. offer bonuses, offer profit sharing with employees, or offer fringe benefits. Non-financial methods, you could give praise, award schemes, and offer an appropriate, a suitable working environment. Number 7, don't drop simple marks. Characteristics of an entrepreneur. So an entrepreneur is an individual who takes on a risk to hopefully gain a reward. And entrepreneurs usually have the following characteristics. They're creative, risk-taking, a strong determination, and have a confident mindset. And the final topic to look at, organic and external growth. Always a big one. So organic or internal growth, the key features. It tends to be cheaper than external growth as a form of business expansion, business growth. However, internal growth often leads to a slower rate of expansion. Increasing output, gaining new customers, developing new products, and increasing market share will help achieve organic internal growth. And this could be supported by releasing new products, entering new markets, and opening new stores. Now, external growth, the key features, it tends to be a faster way to expand a business. However, it's often a more expensive method compared to internal growth. Now, the two types of external growth, a merger and a takeover. A merger is when two businesses reach an agreement to join together and create a larger business. And a takeover is when one business purchases another business through buying the shares in that company. So make sure you've got organic growth and external growth down. And the last thing to say is just thank you. Thank you for all the support this year, and I wish you the best of luck with your exams. I'll see you at the next sesh.